Behind every successful investor, there is a whole lot of good design. Financial literacy alone never guarantees good financial behavior. Knowing the principles of investing is one thing. Acting on them correctly when markets swing wildly in unpredictable ways is quite another. For most investors, bridging this gap is a Herculean task. That's why the key isn't willpower, it's design. By consciously designing your investment experience, you can nudge yourself into making the right decisions at the right time without relying on emotional discipline in the heat of the moment. Here's how to start. First, set clear return expectations for your portfolio. What level of return do you need to feel financially comfortable? Once you know what you want, design your portfolio to make it happen. Let's say you want your portfolio to return 12% per year. Then build a portfolio of stocks and bonds that historically has returned 12% per year. If you invest in an S&P 500 index fund and a bond fund, you can get close to this target. Over the long run, these investments have delivered an average annual return of 10 to 11%. A 12% target is ambitious but achievable. Next, automate portfolio rebalancing once those returns are achieved. You can use a robo-advisor or a financial app to automate this process. This way, when your portfolio hits your return target, the app automatically sells some of your investments and buys back into others to realign your portfolio back to your desired asset allocation. This simple process removes emotion from execution. By setting clear goals and automating portfolio rebalancing, you'll be able to stay invested during market downturns without panicking. When markets swing wildly, your emotions will thank you. Now, you might be wondering why you have to design everything beforehand. Why can't you just wing it? Well, let me tell you a story. I was interning at a financial company one summer, and I was assigned to work with a financial advisor who managed about $30 million in client assets. He told me that his typical client would call him up when the markets were down 10, 20, even 30% and ask him to do something to stop the losses. The craziest part, these clients had told him that they are high risk takers and can handle portfolio losses. But there they were, freaking out. This is because when it comes to investing, our emotions take over our rational minds. Fear paralyzes us when we see our investments plummeting in value. Greed overwhelms us when we see our investments soaring to new highs. And FOMO, the fear of missing out, compels us to chase returns when everyone else is making money. These emotions cloud our judgment and lead us to make terrible investment decisions. That's why having a good investment design is crucial. It allows you to stick to your long-term goals and ride out market fluctuations without panicking. When you're feeling scared, it's easy to forget that investing is a long-term game. But when you have a plan in place, you're more likely to stay focused on the big picture. For example, let's say you're saving up for retirement and you have a target of $1 million. You've invested in various assets like stocks, bonds, and property, and your investments have grown steadily over the years. Suddenly, the market takes a downturn and your investments drop by 20%. This is where your emotions can get the best of you. Fear and greed may try to convince you to sell off your investments and wait for the market to recover. However, if you have a well-designed investment plan with your monthly expenses accounted for, say, 3 years, then you won't be swayed by these emotions. Instead, you'll be able to stick to your long-term goals and ride out the market fluctuations. Ultimately, a well-designed process beats willpower every time. Smart investors don't rely on emotions. They rely on design to consistently achieve their financial goals. What does good investment design look like in practice? You could, for example, design your investment journey so that you never even see your account balances, thus eliminating the temptation to tinker with your portfolio based on short-term price movements. Or you could design your investment journey so that it takes just a few minutes each month to rebalance your portfolio, thus making it less likely that you'll procrastinate on the task and end up making impulsive decisions. If you like stories like this, here's a bonus story for you. There was a study done titled Trading is Hazardous to Your Wealth by Barber and Audion. Research on 66,465 households shows that more trading leads to underperformance versus passive portfolio, clearly demonstrating holding on to a good portfolio over long periods will beat frequent trading. So sometimes the hardest thing for an investor is to do nothing. But that's exactly what a good investment design can help you do. It can help you stay focused on the long term and ignore short term market fluctuations. So if you're feeling overwhelmed by the complexities of investing, don't worry. Good investment design can help you overcome your emotions and make better investment decisions, and you'll be on your way to financial success in no time. Subscribe to my channel, Financial Freedom with Benis Kumar Moses, for more informative videos like this one. If you have any questions, please do comment. I will try to answer each and every comment. Thank you for watching, and I'll see you in the next video.